Are you overpaying in self-employment taxes? If you have an LLC and you're not filing as an S Corp, you might be leaving thousands of dollars on the table.
This video is brought to you by Agent CRM, the ultimate all-in-one software designed for agents and their teams. If you're looking to supercharge your business, Agent CRM has got you covered. From AI-powered schedule bot that helps you fill your calendar effortlessly to comprehensive marketing tools like unlimited funnels, email marketing, and ringless voicemail. Agent CRM is packed with features to streamline operations. With Agent CRM, you get access to powerful automated workflows, preloaded marketing campaigns, and world-class support. Plus, you can start with a free 14-day trial, no sign-up fee, and zero cost to get started. Join over 10,000 satisfied users who have transformed their business with Agent CRM. Head over to the link below or scan the QR code to start your free trial today and take your business to the next level.
Hi, my name is Nguyen, a California business attorney, and today we're diving into a game-changing tax strategy, filing your LLC as an S Corp. If you're a small business owner looking to save money, this could be a smart move, but it's not for everyone, so let's break it down. What does it mean to file an LLC as an S Corp? An LLC is a flexible business structure, but by default, the IRS taxes it as a sole proprietorship for single-member LLCs or a partnership for multi-member LLCs. That means all business profits are subject to self-employment taxes, which are about 15.3%. However, when you elect to be taxed as an S corporation, you can potentially reduce these taxes by paying yourself a reasonable salary and taking the rest as distributions, which are not subject to self-employment tax. The benefits of filing as an S Corp means lower self-employment taxes. You only pay payroll taxes on your salary, not the entire profit. Also, potential IRS audit protection. S Corp taxes are more structured, which can be reduced audit risk. More professional business image. Some lenders and investors prefer working with corporations over sole proprietors. The downsides to consider: more paperwork and compliance. You must run payroll, file corporate tax returns, and follow S Corp rules. Salary requirements. The IRS requires you to pay yourself a reasonable salary. Pay too little, it could trigger an audit. May not benefit low profit businesses. If your business isn't making at least $50,000 to $80,000 in profit, the tax savings may not justify the extra cost. How to file your LLC as an S Corp step by step. 1. Form your LLC. If you haven't yet, set up an LLC in your state. 2. Get an EIN. Apply for a federal employer identification number from the IRS. 3. File IRS Form 2553. Submit this form to elect S Corp status. This must be done within 75 days starting the LLC or by March 15th for existing LLCs. 4. Set up payroll. Pay yourself a reasonable salary through payroll. 5. Follow compliance rules. Keep proper books, file annual reports, and hold necessary business meetings. Thanks for tuning in to Legal Tips for Smart Entrepreneurs. If you found this video helpful, please give it a thumbs up, subscribe, and hit the bell icon so you never miss an update. Drop your questions in the comments below. I'm here to help, and stay informed and stay empowered.